Hello everyone. In today's video, I'll be covering A7 construction contracts. For the first 10 minutes, we'll be focusing on the entire concept. And once I explain the concept, I'll be doing few questions from RTPs, MTPs and ICS study material. And without wasting much time, let us get into the video. Now, what is the meaning of construction contracts? If you look at the title only, you should be able to understand. It is a contract for construction of either individual asset or it can be a combination of assets. And when you are constructing a combination of assets, those assets should be interrelated or interdependent in terms of design, technology, and function. Let's take an example. Let's say there's a company called BHEL. They are into manufacturing power plant. When I'm manufacturing power plant, I don't manufacture a single asset, I manufacture a combination of assets. Let's say I'm manufacturing a turbine, a generator, a cooling tower, so many assets like that. And all these assets have to work together in combination so that the output can be generated, correct? So either it can be an individual asset or it can be a combination of assets. Okay. Next one, there are two types of construction contract. It can be either a fixed price contract or it can be a cost plus contract. When I say it's a fixed price contract, normally we fix the price at the beginning of the contract only. Okay. But when we say cost plus contract, whatever is the cost incurred, we add some profit margin to that, and that is what contractee is supposed to pay. Let's say my cost is 40 lakh, 10% profit, a contractee will pay 44 lakh. My cost is 70 lakh, 10% profit, contractee has to pay 77 lakh. So in case of cost plus contract, normally the price is fixed at the end of the contract. Now, which type of contract is better? Is fixed price is better or cost plus is better? So it depends on from whose point of view we are talking about. So normally from a contractee point of view, fixed price contract is better because he has that certainty about the price. But from a contractor point of view, I would say cost plus contract is better. So theoretically, there are two types of contract, either fixed price or cost plus. Which is better depends upon from whose point of view we are talking about. Clear? Okay. Now moving on to the applicability of accounting standard 7. So in a construction contract, we have two parties, contractor and contractee. A7 does not focus on contractee. Our main focus is on the books of the contractor. And when A7 is applicable, there should be construction activity, and that construction activity should be done because of a contract. So let's say I'm doing construction on my own initiative without any contract, then A7 is not applicable. So for A7 to be applicable, there should be construction also and there should be contract also. Now, what is the main objective of the standard? As I told you, it is applicable only in the books of the contractor, and the main objective is to find out the profit of the contractor. So we don't focus on our day-to-day accounting. The main focus is just to how do we find out profit of the contractor. So how to find out the profit of the contractor? See, profit is contract revenue minus contract cost. Now, what is the meaning of contract revenue? This is a combination of initial price, variations, incentives, claims or penalty. What does it mean? Let's take an example. Let's say I'm a contractor. I enter into a contract to construct a 3-storied building. So initially I fix a price of 70 lakhs, let's say. This is what is negotiated, which is called initial price. Later, as I proceed with the work, my contract is asking for some change in the nature of the contract, some extra room to be constructed or something like that. Because of the change in the contract, there can be some additional amount charged in the revenue. Because I'll not be doing the work for 70 lakhs. Now, because I have to build an extra room, I might charge some 3 lakh rupee extra, which is called a variation. And sometimes in the contract, there can be something called escalation clause. What is this escalation clause? Let's say because of inflation, the prices of raw material goes up. When the raw material prices go up, the cost of the contract also goes up, right? So when there is increase in the cost of the contract, sometimes what happens, some portion of the burden will be shifted to the contractee. Let's say the sand prices are going up, cement prices going up, steel prices going up. So the entire burden I'll not take on myself. I'll shift some burden to the contractee. And that particular clause is called as escalation clause. And because of such escalation, let's say another 2 lakh rupees is shifted to my contractee. So the contract revenue becomes 70 lakhs initial price plus 3 lakh rupee addition due to change in the nature of the contract and 2 lakh rupee due to escalation clause. And let's say, as per the contract, I'm supposed to complete the construction in 3 years time. But my contract is asking me to complete the construction within 2 years and 6 months. And if I do the construction within 2 years and 6 months, my contract is ready to pay another 3 lakh rupee extra. This 3 lakh rupee extra is called incentive. Even that is a part of contract revenue. And there could be something like claims or penalty. Now, claim is something which is not included in the initial price, but ultimately will be recovered from the contractee. Let's say I'm constructing a building for my contractee, and for that purpose, let's say some local approvals are required from the local authority, which is supposed to be paid by some amount for the local approval. Getting the local approval, you have to pay some initial fees, right? So that is supposed to be paid by contractee. But let's say on behalf of the contractee, I only pay that amount to the local authorities and later I claim it back from the contractee, which is called claims or penalty. And let's say that is around another 2 lakh rupee. So in our example, this contract revenue is a combination of initial price. The variations may be on account of change in the nature of the contract or escalation clause. There can be incentive or there can be claims or penalty, all put together 73, 75, 78 and 80 lakh. So this is what you need to keep in mind. So contract revenue is a combination of initial price, variation, incentives, claims or penalty. And variation may be because of change in the nature of the contract or maybe because of escalation clause. And from this contract revenue, you should minus something called contract cost. Very simple. Let's say I'm constructing a building. What all costs may be there? There could be direct material cost, direct labor cost, direct expenses, any production overheads. The total of all this will give you a contract cost. Okay. Okay. So methods of recognizing revenue. There are two methods of recognizing contract revenue. One is called a completed contract method. The second one is called a percentage of completion method. So in completed contract method, what happens? You can recognize the revenue only after the contract is completed. Let's say in my example, the contract duration is 3 years. So year one, revenue will be zero. Year two also, revenue will be zero. I'll book the entire revenue in the third year only. When I do that, what happens in year one and year two? Cost will be there, but revenue is zero. Because of that, I'll be posting only loss in year one and loss in year two. So this method completely does not make any sense. So when you follow completed contract method, you are violating matching concept and you are violating accrual concept also. And because of that, this method is de-recognized. We'll never follow completed contract method. We follow only something called percentage of completion method. And if you look at the name, you should be able to understand. In this method, we recognize revenue on a progressive basis based on how much our work is completed, based on the percentage of the work is over. Let's say 40% work is done, I'll book 40% revenue. 70% work is done, I'll book 70% revenue. But the question is, how do you find out this percentage of the work that is completed? For that, there are three methods. One is physical work completion method, survey method, proportionate cost method. So even though theoretically there are three methods, from examination point of view, we'll be focusing only on proportionate cost method, which is going to be very, very important. See, under proportionate cost method, how do we find out the percentage of the work that is completed? We'll apply one simple formula. Cost incurred till date divided by, in the denominator, we take total expected cost. Very important. It's not the total actual cost. It's always the total expected cost into 100. And this will give you the percentage of the work that is completed. Let's say in the year number one, cost incurred is 28 lakh divided by total expected cost to complete the entire contract, let's say is 200 lakhs. So can we say out of 200 lakhs, 28 lakh is already incurred. So that way 14% of the work is completed. So in year number one, whatever is the revenue that is agreed, in that 14% revenue will be recognized in the profit and loss account. So this is what is called a proportionate cost method, and from examination point of view, we are always going to follow this method only. So how do you find a percentage of the work? Cost incurred divided by total expected cost into 100. See, let us take one simple example to understand how to find a profit. So in our example, the duration of the contract is 3 years. Cost incurred till first year is 20 lakh and further expected cost is 80 lakh. So can we say in year number 1, 20 lakhs is incurred divided by the total expected cost will be 20 plus 80, that is 100 lakh. So 20% of the work is completed in year number 1. And if you look at year 2, it's given to you cost incurred till year 2, that is cumulative cost. 55 lakhs is not the cost of second year alone, it is the cost of first year and second year put together. So in the numerator, I'll take 55 lakhs as the cost incurred divided by total expected will be 55 plus 55, 110 lakh. So can we say 50% of the work is completed? And that is what is completed in first and second year put together. And when we look at year number 3, what is the total expected total cost incurred is 120 divided by actual cost is also 120 because the contract is completed. So 120 upon 120. So 100% work is over in all the 3 years put together. So always try to find out the percentage of work completed on a cumulative basis. So in our example, year 1 20%, year 1 and 2 put together 50%, all the 3 years put together 100% work is done. Now it's given to you initial price agreed is 140 lakh. At the end of year 2, because of the variation 10 lakhs is added to the revenue. Now how do you find out profit of each year? Let us continue with the calculation now. Year number 1, can we say contract revenue is 140 lakh. See, this variation of 10 lakhs is coming only in year number 2. So when I'm preparing first year profit and loss account, we have no idea about the variation. So we take 140 lakh initial price and in the first year 20% work is over. So 140 lakh in the 20%. So first year revenue will be 28 lakh. From the 28 lakh, I'll remove first year contract cost. And what is the cost of year number 1? If you look at that, the contract cost of year number 1 is 20 lakh. So 28 minus 20 lakh will give me profit 8 lakh. This is the profit of year number 1. Let's move on to year number 2. We know that the cumulative work completion is 50%. So we'll take the combined revenue. Combined revenue because 50% is not the work over that only in year number 2, that is first year and second year put together. And in the second year, there is a variation happening. So because of that, your revenue will be 140 lakh initial price plus 10 lakh rupee variation 150 lakh. In that 50% if I calculate 75 lakh will be combined revenue of year 1 and year 2 put together. From that combined revenue eliminate first year revenue. So can we say first year revenue we know already 28 lakh. So from 75 if I remove 28 lakh that will give me 47 lakh which will be my second year revenue. Is that clear? And from the second year revenue, you remove second year cost, that gives you second year profit. Now we know the cumulative cost of first and second year is 55 lakh. Out of 55 lakh, first year cost we know is 20 lakh. So from 55 you remove 20 lakh. So the second year cost is going to be 35 lakh. So 47 minus 35 lakh, your profit is going to be 12 lakhs. This is profit of year number 2. Let's move on to year number 3. And when we prepare for year number 3, 100% of the work is over. Since 100% is over, my total contract revenue will be 150 lakhs into 100%. So this is the revenue of all the 3 years put together. From that, I'll remove first and second year revenue combined. First and second year combined revenue. And we know first and second year combined revenue 75 lakh. I remove that 75 lakh. That is going to give me third year revenue. And third year revenue in our example will be 75 lakh. From this, you remove third year cost. We know that cumulative cost is 120 for all the 3 years. Minus for first and second year put together is 55 lakh. So 120 minus 55, that'll give me third year cost alone, which will be 65 lakh. Therefore, 10 lakh will be profit of year number 3. Okay. So this is how you find out year-wise revenue, year-wise cost, and year-wise profit. I hope all of you are clear with the example. We'll take up more questions so that you understand the concept better. And I would recommend you to please work out along with me and verify the solutions instead of. So I would request you guys to take a rough note and start solving the questions along with me. And if you have any confusion, you can. Okay, we'll try to solve few questions on AS7. Question number 1. Calculate the contract revenue from the following details. Some information is given to you. It's given initial revenue agreed 1000 crores. Revenue increased due to escalation in the second year 200 crores. The same 200 is given over here once again. This claims, incentive payments, and penalties. Find out revenue. Can I say revenue is a combination of all this? Can I say initial price is 1000, escalation 200, claims 100, incentive 150, penalty 50. Add all that. So can I say 1200, 1300, 1500 crores will be your contract revenue. Okay. Question number 2. Induga Limited undertook construction contract to construct subway for 100 crores. Okay, so the contract price agreed is 100 crore. It is estimated that construction cost initially 70 crores. The contract was estimated to be completed in 3 years. Okay. However, when starting the work, it was found that there were rocks underground at the construction site and the cost shall increase by 36 crores. If you see here, while starting the work itself, we found out. Initially, what is the cost expected? 70 crore. Now you're expecting 36 crores increase. So can I say the total expected cost will become 106 crores? Whereas the total revenue is only 100 crores. When your expected cost is going to be more than the expected revenue, para number 35 will be applied. And based on para number 35, we know that because the cost is more than revenue, you should book the entire 6 crores loss immediately. Okay, even though the work is not yet commenced, I have to recognize the entire 6 CR loss by creating a provision for future operating loss. Okay, now what the company wants to do? The company wants to provide for a loss of 2 crores per year. Is the treatment correct? Definitely no. Because as per para number 35, you have to recognize the entire loss of 6 crores immediately. You cannot spread that loss. And if you look at point number 2, if the work has not yet started, but by technical survey, it was known on 25th of December 2002 that there was rock underneath the construction site. Company did not want to provide any loss of 6 crores for the year ending 31st March 2002, considering when the project work would start, the losses shall be provided for. See, the argument of the management is that since the work is not yet started, they don't want to recognize the loss. But what does para number 35 say? Even though the work is not yet commenced, the loss has to be recognized immediately. Therefore, the opinion of the management to defer the losses. Let's have a look at question number 3. A company took a construction contract for 100 lakhs in January 2006. This is a contract revenue agreed. It was found that 80% of the work was completed at a cost of 92 lakhs. Okay, this is what is actually incurred. And company estimates a further expenditure of 23 lakhs. So can we say 92 plus 23, 115 lakhs is the total anticipated cost. Okay. The expected loss would be 15 lakh. Can the company recognize the loss in the financial statements? Of course. See, as per para number 35, we know that the total anticipated cost is 115 lakh, whereas revenue is only 100 lakh. So, irrespective of the stage of completion of the contract, I should recognize the entire loss. If you see here, only 80% of the work is completed. How did we get this 80%? Can I say cost incurred is 92 divided by total expected cost is 115. So 80% of the work is over. And even though 80% of the work is over, I should recognize the entire loss immediately. Now let's see how the profit and loss account will look now. See, on the debit side of P&L, Can we say cost is going to be 92 lakh? On the credit side, when I book the revenue, I'll book only 80% of the revenue. So which will be 100 lakhs into 80%, 80 lakh. And we know that we need to recognize the entire loss immediately. So can I say net loss is going to be 15 lakh? And if you find a balancing figure 95 minus 92, there is going to be 3 lakh rupee, which is called provision for future operating loss. So as per para number 35, you should recognize the entire 15 lakhs loss, and for that purpose you create a provision of 3 lakhs. Let's move on to question number 4. This is a very important question. Okay, I want 100% focus in this particular question. This is a very important question, and similar questions have been tested in the exams multiple times. Okay, a construction contractor has a fixed price contract for 9,000 lakhs. The contract duration is 3 years. They gave you some data. Initial price agreed is 9,000 lakhs. There is a variation in revenue in year number 2, 200 lakhs. Contract cost incurred up to the reporting date. This is up to the reporting date. That is cumulative cost is given to you. So 2093 is year 1. 6,168 is year 1 and 2 put together. 8,101 the year 1, 2, 3 put together. And they gave you estimated profit for the whole contract. Profit is already estimated. Okay. Now they say this 6,168 includes 100 lakh worth of material stored at the site to be used in third year to complete the work. So can I say out of that 6,168, 100 lakh worth of material are ultimately getting used in third year. If it is getting used in third year, I should add that 100 lakhs in the third year cost. But by mistake, that 100 is included in the 6,168 figure. So what we are supposed to do now? Remove this 100 here. So that way, the cumulative cost will be 6,068. And this 8,100 excludes 100 lakh standard material brought forward from year 2. So can I say that 100 lakh worth of material is ultimately getting used up in third year? And if it is getting used up in third year, I should be adding it to third year cost, which means the cumulative cost up to second year should be 6,068 and cumulative cost up to third year should be 8,200. Okay. Compute year-wise revenue, expenses, cost to complete, profit or loss, etc. etc. Now, let us take up one by one. If you look at year number 1, first thing that we need to calculate is the percentage of the work completed, percentage. Now look at year 1. How do you find that? Cost incurred. How much is the cost incurred? 2093 divided by, in the denominator, it's always the expected cost. You guys need to be very careful. What some students will blindly do, they'll take the 8,200 in the denominator, which is a mistake. Because 8,200 is your actual cost. But in the denominator, always what we take is the expected cost. Now, how do we get that expected cost? If you see here, what is the revenue expected? 9,000 lakhs. And the profit expected is 950 lakhs. Can I say the difference between the revenue and the profit has to be your cost? So I'll take the difference of this 9,000 and 950. So the expected cost is going to be 8,050 lakh into 100. So can we say 2093 divided by 8050, and that should give you 26%, which is in the first year 26% of the work is completed. So I'll book the revenue based on that. So can I say contract revenue will be 9,000 lakhs, in that 26%, that'll give me 2,340 lakh. From there, you remove first year cost, which is given in the question 2093. So can I say 2340 minus 2093? So your profit will be 247 lakhs. This is in year number 1. Now let us move on to year number 2. And if you look at year number 2, what is given to us is not the year number 2 cost alone. This is the cumulative cost. Out of that 6,168, if you remove 100, can I say 6,068 is the cumulative cost incurred, correct? Divided by the total expected cost. Now, if you see, In the second year, because of the variation, your revenue became 9,200 and the expected profit is 1,000. So 9,200 is the revenue. 1,000 profit if I remove, the expected cost is going to be 8,200 into 100 and that will give me 74%. So 74% is the combined work that is completed in year 1 and year 2 put together. So based on that, can we say combined revenue will be total 9,200. In that we can book 74% for year 1 and year 2 combined. Let's calculate that. So 9,200 in that 74% will give you 6,808 lakhs. This is revenue of year 1 and year 2 combined. From that, I'll remove first year revenue that we calculated already, which is 2340. I'll remove 2340 from here and that will give me second year revenue. So second year revenue will be 6808 minus 2340. Can I say second year revenue will be 4,468 lakh. From there, you remove second year cost. So we know the cumulative cost is 6068. Out of that, 2093 is first year cost. You remove that. So 6068 minus 2093. So second year cost will be 3,975 lakh. Remove that second year cost and that should give you second year profit. So 493 lakhs is the profit of year number 2. I hope you're getting the concept right. Same way, if I move on to year number 3, can I say the entire work is over, 100% work is completed by the end of third year. Therefore, the total combined revenue for all the 3 years put together should be 9,200 into 100%. Out of that, we already know combined revenue of first and second year. So first and second year revenue 6,808, remove that. So 9,200. From there, you remove 6,808. That will give you 2,392. This is third year revenue. And from the third year revenue, I'll remove third year cost. And we know the total cost is 8,200 minus till second year it is 6068. So 8,200 minus 6068, that will give you third year cost, which is 2,132 lakh. You remove that and that should give you 260 lakhs profit of year number 3. So this way you have to find out the percentage of completion, then year-wise revenue and year-wise cost. See the entire question, the most important point, when you are taking that percentage of completion, in the denominator, you should always take the total expected cost. And to find out the expected cost, I'm taking total revenue and from there I should minus total expected profit. Never take actual cost in the denominator. I hope all of you are clear with this particular question. This question is a very important one. I would recommend you guys to try this question once again, please. Yeah, let's move on to question number 5. Mr. Sham is a construction contractor. He undertakes the construction of an industrial complex. He has separate proposals raised for each unit. Since each unit is subject to separate negotiation, he is able to identify the cost and revenue separately. Should he treat each unit as a separate construction contract? It's a direct theoretical question. You have to remember 3 important words here. Whenever there is separate proposal, whenever they are subject to separate negotiation, and whenever they are able to identify cost and revenue separately, we can say each contract is a separate contract. Okay, a very easy theoretical question. You can just go through the answer given here. Question number 6. Akkar Limited signed on 1st April 2016 a construction contract for 150 lakhs. Okay, 1 crore 50 lakhs. This is a contract revenue. Following particulars are extracted in respect of the contract for the period ending 31st March 17. They're given material issued, labor charges paid, hire charges of the plant, other contract costs incurred. Out of the material issued, material lying unused 4 lakh. So if the material is lying unused, it will be used in the next year only. So therefore, that 4 lakh I'll remove from the material issued. So can I say 71 lakh is consumed. Labor charges of 2 lakh rupees are still outstanding. So as per accrual concept, I have to take care of whatever is paid also and whatever is payable also. So that 2 lakh rupee I'm going to add here. So the labor charges will be 38 lakh. Okay. It is estimated that by spending further 33 and half lakh, the work can be completed in all respects. You are required to compute the profit or loss to be taken to profit and loss account and any provision if required as per para number 35. Let's quickly go through the question. We know material cost is 71, labor cost is 38, higher charges is given to you, other contrast cost is given to you. I'll just add everything. So can we say 71 plus 38, 109, 119, 134 lakhs. So the total expected 134 lakhs is what is actually incurred already. In addition to 134, we are anticipating how much further expenditure? 33.5. So 134 plus 33.5. Can I say the total expected cost is 167.5? Whereas the revenue is only 150 lakh. And if your expected cost is more than your expected revenue, para number 35 will be applicable. Okay. First, let us find out the percentage of the work completed. What is the total cost incurred till now? 134 divided by total expected cost is 167.5 into 100. That should give you the percentage of the work that is completed. Please find that. Can we say 134? So 80% of the work is over. Now, if I prepare my profit and loss account, on the debit side, you have material cost, labor cost, higher charges, and all the other expenses, all put together 134 lakhs on the debit side of P&L. And on the credit side, when I book the contract revenue, 150 lakhs is the total revenue agreed. In that, I'll recognize 80%. So which will be 120 lakh. But as per para number 35, I should recognize the entire loss immediately. And what is the total expected loss? Can I say my total expected cost is 167.5, whereas revenue is only 150 lakh. So I should recognize 17.5 lakhs loss immediately. So I'll book net loss 17.5 immediately. And to recognize that 17.5 lakhs immediately, can I say the balancing figure 137 and off minus 134 lakhs, so 3.5 lakh. This will be your provision for future operating loss. Or before solving the next question, let us try to understand one very important concept here. The two important words you should understand: work certified, work uncertified. So let us say a teacher has given some homework to the student. Student has completed the work and teacher has verified it already. So can I say that is work certified? So work done and certified already. Work uncertified, what is that? Student has completed the homework but teacher has not verified. So can I say in both the cases the work is completed, but in one case it is already certified, the other case it is not yet certified. Similarly, in construction contract, when I say work certified, it means the work is already done by the contractor and the engineer of the contractor has certified that work. And similarly, when I say work uncertified, it means the work is already done by the contractor, but the engineer is yet to certify the work. So can we say both work certified as well as work uncertified, both mean the cost incurred? So the entire 50 lakhs is nothing but cost incurred till date. So try to remember this. Work certified, work uncertified, both put together is nothing but actual cost incurred till date. And this is also called work in progress or capital work in progress. Clear? Okay. Now let's take an example. Let's say work certified is 20 lakh. Work uncertified is 30 lakh. So can I say the total expected cost, total actual cost incurred till now is 50 lakh. And further expected cost to complete the project, let's say another 30 lakh. So the total expected cost of the project will be 50 plus 30, 80 lakh, correct? So in our example, 50 lakhs is the cost incurred divided by total expected cost is 80 lakhs. So in 200, can I say the percentage of the work that is completed is 5 upon 8? So 62.5% of the work is completed, correct? And now let us say revenue agreed in our question is 100 lakh. Revenue agreed is how much? 100 lakh. If I prepare my profit and loss account for this data, on the debit side, can I say my total cost incurred till now is 50? That is nothing but certified as well as uncertified. On the credit side, I'll book the revenue based on the percentage of the work completed. So 100 lakh. In that, 62.5% work is over. So I'll book how much revenue? 62.5 lakh. Correct. And that is going to give me a profit of 12.5 lakh. Correct. Now, if I have to find out how much is the amount due from the customer, in simple words, can I say we incurred cost of how much? 50 lakh. And what is the profit we have recognized? 12.5. So from the customer, I should collect 62.5 lakh. So in simple words, whatever is my cost, I'll add the profit to that, and that is what is the amount due from the customer. So can we say amount due from the customer equal to, there's a formula I should understand and remember, amount due from customer equal to cost incurred till date plus if it is a profit, I'm going to add that. In our example, it's a recognized profit, I'll add that. If it is loss, I'm going to minus that. So add recognized profit or minus recognized losses. Okay. Let's see in our example, what is the cost incurred till now? 50 lakh. And what is the recognized profit? 12.5. So 50 plus 12.5, how much is due from the customer? 62.5 is due. But let us say out of 62.5, already we have done the billing for 60 lakh. Already we have done the billing for 60 lakh. So now what is the amount due from the customer? Is only 2.5 lakh. So can I say to find out the amount due from customer, we should minus any kind of progressive billings made. So in simple words, the amount due from customer, this is the final formula, cost incurred plus recognized profit minus recognized losses minus progressive billings made by the contractor till date. Very important equation. I want you guys to understand and remember the concept here. With this understanding, let us move on to question number 7. Yeah, have a look at question number 7. Some stories given to you. Total contract price is 12,000. Work certified, work not certified, both put together 7,500 is the cost incurred. Estimated further cost is given to you 8,750. So if I add these two, can I say 16,250 is the total expected cost? Okay. Progress payment received is 5,500. Progress payment yet to be received is 1,500. So can I say the total billings made till date is 7,000? Sir, we made a billing for 7,000. Out of that, 5,500 is received, 1,500 is yet to be received. Okay. Applying the provisions of A7, you are required to compute. First one, profit or loss for the year. Direct question here. Can I say in this example, your expected cost is 16,250, whereas revenue is only 12,000. Your cost is more than the revenue. And since cost is more than the revenue, para number 35 is applicable. And because of that, you should recognize the entire loss immediately. So the answer for the first question, 4,250 lakhs loss will be recognized immediately. Excuse me. Next one, work in progress. See, work in progress is nothing but the total cost incurred. There's a total of work certified and work uncertified, which will be 7,500 lakhs. Okay. Next part of the question, find out revenue to be recognized. See, revenue will be recognized based on the percentage of the work completed. How much cost is incurred? 7,500 is what is incurred, divided by total expected cost is how much? 16,250. So can I say 7,500 divided by 16,250, 46.15% of the work is completed. So since 46.15% of the work is over, I'll book only that much revenue. So what is the total revenue expected? 12,000 into 46.15% is what I'm going to recognize. So can I say 12,000 into 46.15%? 5538 will be the revenue to be recognized. Moving on to the last question. What is the amount due from the customer or due to the customer? Just apply the formula. Cost incurred till now 7,500 plus recognized profit minus recognized loss. In our question, we have recognized loss. So remove that recognized loss, which is 4,250 minus progressive billings made. We know the total billings made till now is 7,000. So just do this calculation. Can I say 7,500 minus total, all this you remove, you get 3,750 negative figure. And since you're getting 3,750 negative, this is amount due to the customers. Because we have done the billing more than what I'm supposed to receive. So 3,750 is not amount to be received. This is amount to be paid to the customer. I hope this question is clear. Okay, moving on, question number 8. Shan Limited commenced a construction contract on 1st of April 2018. The company expended 500 crores for 40% of the work. Okay. The total estimated cost of the project is given to you 1,250 crores. Okay. Compute revenue, expense, provision for loss, profit or loss, etc. If it is a fixed price contract of 1,200 crores. See, if it is a fixed price contract of 1,200, can I say the total revenue is 1,200? Whereas total cost is 1,250. So I should recognize the entire loss immediately, 50 crores. So let me prepare the profit and loss account for first case. See, on the debit side, cost incurred is 500. On the credit side, revenue, I'll book only 40% revenue. So out of 1,200, I'll book 40%, which is going to be 480 CR. And we should recognize the entire net loss immediately as per para number 35. So how much is the loss I should recognize immediately? 50. Therefore, provision for future operating loss is going to be 30. Okay. This is the profit and loss statement for question number 1. Question number 2. What if it is a cost plus contract of 20%? That's going to be very simple. If it is a cost plus contract, on the debit side, I'll take cost. And how much is the cost? 500. On the credit side, I'll take revenue, which is 500 plus 20%. Can I say 600? And your profit is going to be 100 lakh. Now, para number 35 will not get triggered here because I know my cost is 500, revenue is 20% extra, which is 600. So there will be a profit of 100 lakhs. I hope all of you are clear with this. Okay, I've shared this material in the Telegram group, and you can find the link to the Telegram group in the description box. So this material is shared over there. You can just download the material and try all the questions from this. Clear? We'll do one last question. Remaining questions you can give a try here. AB contractors enter into a contract on 1st January 2021. Okay, to construct a 5-story building. Under the contract, AB is required to complete the construction in 3 years. Perfect. The following information is relevant. Initial price is given 5 CR. Material cost escalation to the extent of 20% increase in the material cost. So how much can be shifted to the customer? To the extent of 20% of the increase in the material cost. Fine. And labor cost also, there is an escalation clause that is up to 30% of the increase in the minimum wages. Okay. In case AB is able to complete the construction in less than 2 years and 10 months, they will get incentive also 50 lakh. However, if the construction is delayed beyond 3 years and 2 months, there will be penalty of 20 lakhs. Okay. At the start of the contract, we have a reason to believe that the construction will be completed in 2 years and 8 months, and it actually got over in 2 years and 9 months. Okay. Labor cost was originally estimated to be 1.2 crores based on the initial minimum wages. However, the cost has increased by 25% during the construction period. But look at the escalation clause. It says, in case of labor, you can shift the burden up to 30% of the increase. But if you look at the question, there is only increase of 25%. If there is only 25% increase, if there is only 25% increase, I can shift the burden of only 25. I cannot shift the 30% burden to the customer. Which means out of the minimum wages of 1.2 CR, how much burden can be shifted to the customer? Can I say 25%? So 30 lakh burden can be shifted to the customer. I cannot shift 30%. I can shift only 25% because the increase is only 25%. Clear? Next. Material cost has increased by 40% due to short supply. Okay. The total increase in the material cost due to 40% escalation is 80 lakh. So 40% escalation is 80 lakh. But if you look at the escalation clause, they say material cost escalation is allowed only up to 20% of the increase. So if 40% of the increase is 80 lakh, can I say 20% of the increase is going to be 40 lakh? So variation in labor is 30 lakhs and variation in the material is 40 lakh. Okay. Now they're asking you, what should be the contract revenue in the above case? Very direct question. If you see here one by one, initial prices 500 lakh, material escalation we found out 40 lakh, labor escalation is 30 lakh. In addition to that, there's an incentive of 50 lakh. And this 20 lakhs penalty will be there if you complete the construction beyond 3 years and 2 months. In this question, that is not relevant at all. So can I say if I add all this, 540, 570, 620 lakhs will be revenue for the first question. Second part of the question, assume that in year 2022, XY requested AB to increase the scope of the contract. Because of this, additional floor has to be constructed. So can I say there is a variation due to change in the nature of the contract? And how much is the additional fee for that? 1 CR. So 620 lakhs is already agreed revenue. And because of the variation, how much I'm paying extra? 100 lakhs for that additional floor. In addition to that, AB has incurred a cost of 20 lakhs for getting the local authority approvals. And this 20 lakhs also will be claimed back from the contractee. So any claim or penalty also should be added in the revenue. So can I say the revenue for the second example is going to be 740 lakh? Okay. So I hope all of you are clear. So with this, I've tried to solve the entire concept of AS7 and I've solved few questions for AS7 also. In the coming videos, I'll be solving few more accounting standards. Please follow the channel. Hope it will be helpful for you guys. Kindly share with your friends too, so that this will benefit your friends also. Thank you so much.